But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Welcome back to the Junius Maltby channel. How bad is it? Another 6.6 million Americans filed for unemployment. And the numbers are staggering and continuing to grow on all fronts. Job losses are surging, and it was expected. It's been talked about. We've discussed it here, but it's only getting worse. And I think it can only worsen with the effects of what we've experienced having taken place recently. Again, another 6.6 million. These are huge numbers, like nothing we saw back in 2008, 2009. That pales in comparison. We also have a third of Americans not paying their rent. I mean, that makes sense. If you don't have a job, you don't have cash, these people, they can't. They have to make do with what they have. So they're not paying their rent. On top of that, home sales are plummeting, new listings plummeting. Just new listings alone for houses falling 27%, almost 30%, and that's going to continue to drop. No one wants to put their house on the market at this time. Some people may be forced to. There's likely going to be an entire part of the economy when it comes to the mortgage side of things, mortgage-backed securities. Of course, they were considered the culprit during the last economic crisis. And again, this crisis is so much bigger in scale. Just imagine for a moment how much bigger this particular crisis is going to get as it unfolds, as the mortgage-backed security portion of things starts to inch into this. Because really, it was doing somewhat okay. It wasn't that bad, the mortgage side of things. Now the dominoes are tipping, and these are going to be dramatically affected. We're going to start seeing those defaults, those foreclosures, and what that's going to do is it's going to destroy those asset classes. And a lot of the banks that have a significant amount of exposure to mortgages are going to suffer losses. We're going to see a decrease in real estate prices as a result. I mean, this is basic economics now. I mean, we've always talked about how basic it really is. I remember the first economics book I ever read. It was probably, I think it was 200 pages. And it really covered just the fundamentals. And, again, supply demand. There's going to be an oversupply of homes in this country at this point, and there's going to be a very limited amount of people capable of getting the credit and getting the approval to purchase new homes. So that I think we're going to see a dramatic cooling off in the real estate arena nationwide. And what that's going to cause is, again, a decrease in prices. A lot of people are going to end up underwater. They're not going to want to make those payments because now they're sitting in what is an appraised value property of $200,000 or $300,000, excuse me, but they owe $500,000, $600,000. So yeah, that's going to be an issue, and it's going to continue to accelerate. I think that's why we're seeing the Fed panic the way they are. I've lost track of what the Fed is doing, how much money they're creating, coming up with, printing, and injecting into the system since not before this even began. Remember, they were doing things because of the repo market that was falling apart back in September and during the fall. And then this hits, and now the Fed is in full bazooka mode, just firing. They're not even using bazookas anymore. They're doing an artillery barrage of fiat onto the beachhead of the economy, just hitting it with as many shells filled with dollars as possible in order to stave off absolute economic calamity. With them rolling out this new $2.3 trillion, again, $2,300 billion to inject into the system. They rolled that out. They're announcing all of these major stimulus and quantitative easing programs coming up with so much incredible. I mean, it really is. It's mind-blowing, the amount of money. I mean, years ago, we did a video on just the debt and the deficit, and there was a lot of, it came from the visual capitalist, and you could see pallets of cash to kind of really paint the picture of how much money we're talking about here. Again, remember, there's only around $7 trillion worth of gold that's ever been mined since the beginning of time. And a friend of mine, we were just talking about this the other day, he went to the debt clock. You can, I guess there's a feature on there, I haven't seen it before, that shows you with the debt of the U.S. government, if all the dollars in the debt and everything was balanced out with what gold should be at. It values gold approximately at $18,000 an ounce, based on if you had to back it right now, if you had to back the dollars for the U.S. government in circulation, what it would value gold at. And that's an incredible number there. This is only going to exacerbate the amount of debt load and the amount of, again, dollars in circulation. Eventually this will result in the dollar losing its purchasing power. It's a fundamental rule of economics that it will occur. It's just a matter of time. Right now, that money that they're pumping into the system, it's going to find its way through all of the different arteries and make its way into the distal regions of the economy. And once it's spent, and once it starts working its way through the economy, that's when we will see even further price reactions. We already saw metals react today with the announcement of these new Fed programs. And it was, again, very bullish for metals. Again, we're in a multi-decade bull run from this point forward. We announced that a while ago. We talked about this being a multi-decade bull run on this channel for some time, and that's exactly what it is. And at this point, they're just adding fuel to that and making it even more so. They're really, really making it a stronger case for that multi-decade bull run for metals. And you can see here the Fed is seizing control of the entire U.S. bond market. We just talked about the $2.3 trillion going in. And if you look here, we'll read this part, $2.3 trillion in loans to support the economy. It will wade into the $3.9 trillion U.S. municipal bond market to an unprecedented degree, can now purchase, quote, fallen angel bonds from companies that have recently lost their investment grade ratings, and has expanded its term asset-backed securities loan facility to include top-rated commercial mortgage-backed securities and collateralized loan obligations. They're already setting up and trying to create defenses around what is going to be a disastrous mortgage-backed security component to this economic demise that we are witnessing unfold before us. Again, to reiterate, all of this far worse than anything we anticipated, discussed here, any of the conversations I've had with you guys. I just didn't see this happening as quickly. The velocity at which it occurred was very surprising, and the timing when it occurred was quite impressive. Yeah, we saw the problems in the fall, and I just think that this event that we're witnessing really truly is that it's that moment. It's that moment that the stacking community, I almost shy away from using that term, but those that realize the value of precious metals for wealth preservation, dynastic wealth preservation, it really is going to be that vindication that a lot of them have been waiting for. Just look at today, for example, how metals reacted to the Fed news. Of course, the markets were green. Again, I think the Dow went up 300 or 400 points. I didn't really take a close look at it. But gold up $56, up 3 1/3% to $1,740. So it's well into the $1,700 now, $1,740. Remember where this year started. Silver, $15.91. It's knocking on 16's door again, up 70 cents, up 4.67% for silver. I need you guys to stick around while I read a comment soon from one of you out there, one of you that are a viewer, because it's brilliant and it's worth sharing. I told him I got to read this on one of the videos coming up, and we're going to do that. It talks about gold and what we're going to probably see. A very good point is made on what we might see going forward. Here again, the paper gold price, gold COMEX, and we're going to start calling it that from now on. The paper gold price is $1,740. And look at the chart there, but I really want to look here at the year-to-date change, up 13.6%. And then the one-year change, so going back a full year, 29%. Gold up 29.5%, 29.47%. We're going to look at some of the equity markets here in a moment, and you're going to see where you'd rather have had your money sitting for the last even 2 years, I think. You can see the big sell-off there when all this hit. Again, I'll reiterate and remind you why that occurred. Financial institutions were dumping their paper gold. They had to. They needed to cover losses and margins in other areas. So what do they do immediately? They did this in '08. They dump their gold because it's the most liquid asset they have. They dumped it, covered losses, but now the strong hands were buying it, by the way. When they dump it, there's a buyer, so someone was there to buy it. They were selling and someone else was buying. And now those buyers are buying even more. And again, we've already talked about COMEX. It's breaking down. It's falling apart. There's a complete disconnect between paper gold and physical metal that can be delivered. There's delivery problems occurring, and I do believe there is panic in that world for those that are very, very wealthy that are trying to get their physical and get it vaulted right now. You just saw how well gold has been doing. Again, it was up 29.47 from a year ago and doing very well even on the year, 13 point something. And here we've got the S&P 500. For the 1 year change, it's down 3%. And for the year-to-date change, it's down 13.65%. So just getting pummeled, annihilated. Gold doing far better than the S&P, even going back a full year, a full 2 years at this point. The S&P just being ruined by what's taking place. And again, these numbers can only worsen. Right now, the greens we're seeing, these are sucker rallies. They're luring the idiots back in to just take their money and fleece them. The dollar-denominated assets that these are reflecting are going to purchase less and be worth less regardless of the index number and the performance at any point. Taking a look at the Dow, it's down 9.3% from a 1 year ago, and the year-to-date change is down 16.89%. So again, down 9.3. We've got gold up 29.5. Gold doing literally around 40% better than the Dow. If you take the spread, down 9.3 and then up 29.47 for gold. So just significantly better performing and absolute preservation of wealth for anyone who was in gold rather than the Dow. If you get a chance, go back and watch that video we did before this even hit on where have all the gold bears gone. All those that were so bearish towards gold, making those outlandish, insane, ignorant, stupid calls for gold to plummet below 1,000, below 850, below 750. We saw those calls for the last several years. We knew it would never occur. I was always confident we would never see gold below 1,000 again. And as a matter of fact, my main call on it was it would never drop below 1,100. And that was based on significant central bank purchases at that range. Here's silver. Silver's up at $15.91. We just talked about that, up 71 cents today, up 4.6%, 4.67%. The year-to-date change, we're finally back in the green. It's up 0.82. That's the 1 year change, 0.82. The year-to-date change, it's down because they obviously dumped it. And I've talked about my feelings with silver because of its industrial exposure. It takes a beating during economic crisis. And so, it's down 11.5 on the year-to-date, just this year. It's going to pull out of that. It's already green from the 1 year. It's down a little bit this year. I think it's an incredible buy right now, especially when you look at the gold-silver ratio. That has to narrow. It has to close up at some point. Silver at 15, it's a steal. But again, this is the paper silver price. Remember that. No one's selling silver for $15.91. I was looking today, even 1,000-ounce COMEX bars, real to be delivered 1,000-ounce COMEX bars. There's places getting $1 over spot for those. That's unprecedented. It's unheard of. 99 cents or $1 over spot for a 1,000-ounce giant bar that can fluctuate anywhere in a range of, I think, 10 ounces or more. They can be anywhere from $9.90 to $4.10, $9.90 to $1,010, I believe. So they've got like a 20-ounce spread on those bars. Of course, they weigh them individually, and you will pay per ounce what you're getting. But again, these are giant, unwieldy, just grotesque bars. I mean, I would love to have a COMEX bar, but it's not something that's really easily moved and broken down into, silver that you're going to use in an exchange for goods and services, unless you have someone that wants a 1,000-ounce COMEX bar. And once silver explodes in price, it's going to be worth a lot more than really what you're going to be willing to unload it for. As far as you're not going to have a whole lot of items that you would need that's going to require the purchase with a 1,000 ounce bar of silver, unless it's, you're buying a plot of land or a farm someplace. Now here's where I want to read the comment that a friend of ours left on one of the more recent videos. He left this on the "Was there a COMEX LBMA default?" ? Yes, recent video here on the channel. The viewer's name, Tetelestai, and I'm going to read this word for word how he worded it, and then we'll talk about it. People talk about divergence between COMEX and LBMA. Who cares? The same players are on both markets. The two are the same, yet everybody misses the point that COMEX and LBMA are the only gold price discovery mechanism of sufficient depth at the moment. No transactions for physical gold directly influence the price. So once trust is lost in the existing paper gold price discovery mechanism, the price of gold that we all watch and talk about will plummet to close to zero again, because people will lose faith in paper gold. This will confuse many. Some physical gold holders will panic and will try to sell their gold for whatever they can get. I can guarantee you that's going to happen. You're going to see people dumping it out of fear. Think of the killing that pawn shops will be making. The media will be writing articles about an epic gold crash, and that gold is indeed a relic of the past. Some gold bugs will capitulate. The market will fragment. All sales of physical will be negotiated on a case-by-case basis. The prices may become regional and gyrate hundreds of thousands of dollars up and down. Some will try to make market in physical gold and will be quickly destroyed. Big holders of physical will just sit tight and wait. The central banks, they won't unload anything. And that's me interjecting that part, that little comment. It may take some time until a new physical-only price discovery mechanism is established that everybody can trust. Imagine a deep-pocketed Swiss bank or Swiss bank consortium openly, publicly bidding for physical gold at $15,000 or whatever price, and then making market for physical gold starting at that price. They would only be bold enough to do it if the BIS, the Bank of International Settlements, can get a nod from the U.S. and other big players that it's okay for them to do so. So I imagine some sort of monetary gold conference would take place to get the physical gold moving again. So watch for the gold price to plummet. Until then, the paper gold will persist, which gives you an opportunity to buy some physical gold. Please don't sell your physical gold when the price falls to the ground. Exactly. Keep your metal, ladies and gentlemen. There's a brilliant comment to Telestai, my friend, whoever you are out there. Thank you for that input. It was a very good observation, and I do agree with it 100%. Absolutely agree with that position. We are going to see, when the COMEX breaks down, extreme volatility with metals, especially if there is any semblance of some kind of market pseudo recovery. And you know what that means when they patch the leaks here and try to get this to blow another bubble out of it, even bigger bailout bubble than we saw last time. You'll see people retreat from gold when the COMEX starts to shatter and they start dumping paper and the price plummets. A lot of weak-handed holders, people that are new to the precious metals world, they're going to panic. They're going to dump their metal as soon as they can to get out of it because they're afraid. And once that all settles down and real price discovery occurs again at whatever point, metals are going to be worth far more than any of the reflected paper purchase prices we've seen on the screens today. Again, this is all the prices we talk about and see. It's paper, it's not physical. And again, the COMEX is having problems. It's going to fall apart. Eventually, it's going to break down completely and entirely and seize up. So keep stacking, keep holding, keep acquiring at this point in time. And remember, if you're interested in winning this beautiful 10 ounce, look at that, 10 ounces of silver, this Queen's Beast, head on over to our friends at the Silver Forum. Good guys over there, very like-minded community, just a bunch of other kooks like us that put their wealth into precious metals. And they have this available as a giveaway. It's one of the more beautiful, bigger giveaways I've seen for the stacking community. A full 10 ounce Queen's Beast. and I'm just helping them out, spreading the word here. So there you have it. Go check out the silver form and let them know Junius sent you over there, that you're interested in trying to win this Queen's Beast. Thanks for tuning in. Thanks for being part of the Junius Maltby channel today. Thank you to all the Patreon supporters out there, each and every one of you that makes this channel possible and contributes. And those of you that contribute during the premieres and the lives, all those who support the channel. Don't forget to like, share, subscribe, and participate down in the comments below. As always, your comments, your input is valued. I mean, just look at today's video for an example. One of the best pieces of information in today's video, in my opinion, came from one of you. It came from a comment right down there, a gem of a comment down in the comment section. So I appreciate it. And thanks for participating here in the Junius Maltby channel. Have a good night.